how is it possible that a company that has practically 10x their Bitcoin holdings uh, has stalled its price? That is comparing the picture of April to the picture of today. Naturally, what happened in the middle is it went to the roof, and now it's like a 70-80% drawdown. What is your analysis, your explanation? I mean, of course, that the first thing is MNAV decompression and so on, but like, what's the story? Again, because for me, like the headline is Metaplanet 10x is their Bitcoin holdings, regardless price is still at the same level. So, what's the thing?
Yeah, I mean, we're only looking at one part of that equation, right? And there's other moving parts. What is the level of float that they're actually managing? For example, did they expand the float on the equity side of the shares? If you know, and this is, I actually cannot speak specifically at Metaplanet because I haven't looked into it for Metaplanet specifically, but I have seen it for some of the DATs that are out there, and as they're expanding it, and they're not expanding it by a small amount. It's not like they're expanding the float by like 1%, 2%, and we're talking about like 20%, 30%, 40%. That can rapidly kind of compress that MNAV. So that's definitely one of the factors. Another one is that like many of these companies are trying to actively manage that MNAV. They don't necessarily want an MNAV of 3, 4, 5. Like you would think that like bigger is better on here, but not necessarily. Like some of them are trying to restrain it. Some are trying to like manage that. So they're keeping it at a level that they find appropriate for their level of risk. So I think that you have to kind of look at the picture holistically. It's not just like, man, they've 10x their like level of like Bitcoin holdings. Why isn't their like share price going higher? It's like, well, what else is happening? You know, like there's tons of other things that are like they're using to kind of manage a balance sheet. Are they managing that risk? Like, I think that many of the like DATs are also starting to introduce kind of like risk measures to kind of control it, either playing in the options market or perps market or whatever, to actually be able to manage this as well, which I actually think is applaudable, like a good thing, like because actually like I was more worried about what was going to happen to their downside risks because like there's a positive spiral on the way up with this stuff as you take leverage and the market's going up, but what goes up, if you're taking leverage on that, we all know what happens on the way down if you're taking leverage as well. So I want to
Yeah.
avoid some of those liquidations. And I think one way to do it is to actually manage your risk properly, put in like a place like things on the derivative side of things to actually control for that. So I think that we need to kind of look at this individually with each DAT and, actually understand what's going on behind these numbers.
Yeah. David, is the market getting more rational about DATs and Bitcoin treasury companies?
I think so. I would like to hope so. There was definitely like a giant rush in the beginning of this stuff because this was the hot new thing and everyone kind of wanted to get into it. And what I like about this cycle, and there are a few things that I think, or I want to like to point out here, is that on the crypto side of things, not everyone was excited about this. From the crypto world, you
Yeah.
had like some pretty big names out there, people who are going like, "Oh God, not again! Didn't we go through this with like Voyager and Celsius and like this bad cycle in 2022. We don't want to run these risks." And I think it was prudent because, we've all been kind of hurt. And, many of us have gone through multiple cycles, but I think 2022 was definitely one of the bigger ones. Of course, obviously the biggest one in recent memory where we're just like, not that again. And by the way, I don't think it is. I don't think that we're kind of like at the risk of being the same kind of like Celsius FTX kind of like blow up kind of place. Certainly, it has elements of that feels like it because it's like, hey, didn't we see this with Grayscale's Bitcoin Trust, for example, when we went from like premium to discount?
Yeah.
Isn't this kind of the same thing? Not exactly. In part because, like, well, definitely because you were locked up on the Grayscale Bitcoin Trust in a way that you're not here. Their exit strategy was the ETF.
Yeah.
Whereas here, you can buy and sell the stock. You can get in and out of it if you need to. But like that also kind of complicates things because on the one side, you have more options. If you're a large DAT, for example, you can say like, well, heck, then I could sell my my assets, my crypto assets, if I need to, and buy back my shares. So I can bring the MNAV back to 1. But also that kind of leaves you susceptible to what the market conditions are like at that time. Also, keep in mind, some of these things involve pipe deals, some of them involve in-kind transactions that are kind of locking up some of these tokens inside of their treasury. So, like it's not just all the same. Like there is actually differentiation among the DATs that we need to be aware of as well.
Yeah, no, super interesting. Could we say that Bitcoin? This is also something that we were talking with Luca. Could we say that Bitcoin treasury companies and DATs are like the narrative of this, like of this cycle? Maybe not in the beginning of the cycle we had ETFs, and this feels like ETFs 2.0, which is like the other part of the cycle. Could we say that like basically this bull cycle all the way down from those 25 30K, I mean even before we were at 15, right? But end of 24, we were at beginning of 24, sorry, yeah, we were at 30K. We had ETFs launched, and all the way up to today that we have like all this Bitcoin treasury mania. Like, could we say that this cycle was like mainly ETFs and Bitcoin treasury companies and that's, or like what's your view on this cycle that's been lasting for the last practically will be soon close to 2 years?
Yeah, I think that this cycle is it's characterized by institutional participation. And what I mean by that is that institutions have been trying to figure out how to get involved in here for some time now. And definitely the regulatory environment was a big factor for allowing this to expand in a way. And the ETFs started that. But I think like the big part of what like happened with the DATs actually happened after the Circle IPO. And I bring that up because that was the point where Wall Street was just like, well, now I'm interested. Like the Circle IPO, like we all saw how well that did, for example, and DATs were already starting to progress ahead of that. But like after that, all the interest really kind of came into this market, and then it was just like, well, IPO this like crypto entity and that crypto entity, and let's have these DATs and let's do all the stuff. And for me, this is kind of like the same kind of theme that we're seeing in reverse to the tokenization part of it, because we're on the crypto side of things going like, hey, let's tokenize stuff. Let's, like we've been talking about this for like the last, since 2017, but let's really do it now. We can actually tokenize whatever like stock that's out there. And maybe like we should have like a pre-IPO like offering for, I don't know, OpenAI, and we'll do that for other things. And we've seen that like there are entities out there that are trying to do that, or just kind of like bring all like the tokenized stocks on chain. So like this is just kind of like this kind of like cycle here that's going one way and the other, like where they're just like, we're trying to tokenize the equities. Equities are trying to like basically like equitize the tokens, and like where we're just kind of like going in circles around this, trying to figure out where all this is going to end up. And it makes sense why it happened, right? Because like if you were Wall Street, you were sitting on like nothing for the longest time. I mean, for like 2-3 years there, you were just like, no one wanted to do an IPO. No one wanted to like, like they couldn't make money off of this. And now they're looking at it and they're going like, oh crap, there's a lot of money here. Like you look at Tether, for example, the biggest like stablecoin issuer, they made like what, $14 billion in 1 year. Like I used to work at Deutsche Bank. Like Deutsche Bank's like profit last year was like $6 billion. So you're talking about Tether, staff of 150 people, compared to like Deutsche Bank, which is like tens of thousands of people, and they have to split $6 billion instead of 14. Like those numbers alone, they're just kind of like, oh crap, we need to get involved in here because there's definitely like profit to be had inside the crypto space. So I think everyone's trying to figure this out right now, and this is why like everyone's kind of getting involved. This is why Wall Street is like happy to say like, let's promote more of these DATs, because this seems to be a way to kind of get in a way that we couldn't break into the space previously.
Yeah, David, you said it so well, man. Also, today, this morning, I read that Nasdaq was looking, to tokenize stocks. I don't know if you read it, but yeah, I would love to know, like, how do you imagine that world where, like, exactly as you were saying, companies or the big players in the market, the traditional market, try to get their hands on, of course, like furthermore than what we've already seen,
Yeah, I think this is where everyone's debating right now. They were debating like tokenized stocks. We're debating like 24/7 trading, and like you're like incumbents in the space are like no one wants that, or we definitely don't want to do it. And like like I get it. Like trading 24/7 is taking years off my life in the crypto space. I'm sure it has for all of us. We always say to each other, like, hey, why does this 1 year feel like 5 years in crypto when you're like versus in the outside world and traditional finance where like a year is a year. Um, like I don't think it's going to be that bad. I think that we're probably going to see that, yeah, these things are going to be like different from what we have today. But the status quo is definitely moving that route. Like it's definitely going to change whether we wanted to or not. I think this is the thing that I think a lot of the older incumbents in this in the traditional finance world, they don't recognize it. They're just like, oh no. Like we can kind of get by without AI. We can get by without trading 24/7. We can get by without tokenization. I'm like, you think you can, and maybe you wanted to be that way, but you're not going to stop it. Like this is the way the world is going. And absolutely, like NASDAQ, like I think this was just another kind of sign of this. Like they want to get approval. They know that if they don't compete here in that space, this is where everything's going to go. This is why people think that like places like Coinbase, Robinhood, and whomever, and I'm not saying this just because I work in Coinbase. They're like, oh yeah, this is the new Goldman Sachs of the world because they're actually at the forefront of being able to provide the custody, the wallet, the trading platform in order to do all this stuff.